Good morning, everyone. Hope you are having a great long weekend. Thought I'd do a little video here to help those who are trading slower market times like these holiday hours where there's not a lot of volume and there's not a lot of follow through. What we have here is a little balance zone I created using a 5-minute chart. And what I did was I looked at these lows and these highs, and when you look above these highs, do you come back to these lows? And when you look below these lows, do you come back up to these highs? So I had a balance zone of 40.85 to 40.88 and a quarter. Now I know there's a huge range, right? Big deal, JJ. But this is how it can help you trade because overnight inventory was long as all of the trading was above VWAP for most of the night. Then when London opened, it corrected lower. So we can have a lower target by just expanding the balance zone 2 times, right? So we had 40.78 half, and when we went under 40.78 half, it took some time here, and this is the accumulation of that inventory that sells off because not everybody sells at the same time, so it takes a little time to clean the market up. Then what we do is we can see once the market starts getting over 40.78 and a half, it starts to accept back into the lower two extensions of balance. So this is when you can start building a little position here. And then once we get up over VWAP, you know that your target's around 40.85. So, say you put a little 40.80 long position, and then as soon as you get over VWAP, 82, 83, 84, 85, you're selling out, right? This could help you trade these slower markets where there's not a lot of order flow. There's only 68,000 contracts so far in the overnight. And, the RTH session is going to be a shortened session because the New York Stock Exchange is closed. Hopefully this helps. You can see the structure here in the TPO chart. Now I know TPO charts are a little difficult to see, but this inventory that's trapped long is this here, right? Same thing, charts are just a way of showing the transactions in a market. And don't let anybody try and sell you like expensive order flow charts or order flow tools. A candle chart is an order flow chart. It just shows where the orders flowed in and transacted. These are just records of transactions, right? So you got trapped inventory, it sells off, left a poor low in the overnight. That's a structural piece of information. So you can take logs off of that, right? On a half-hour candle, you don't really see it on a 5-minute, but you can see that the lows are around the same area, and that bid starts creeping up. It's another little thing about candle charts, right? When the lows start getting higher, it means the bid is moving up and traders have to take the offer because there's not enough supply on the bid. That's what makes markets move higher. Those are the mechanics of it. So if you're long in this, say you had even established a long position under 78. If you're a larger trader, you could maybe risk a little bit more by getting long a little lower. Smaller, newer traders wait till we confirm above 78. These people who are building positions here, their out is that second standard deviation, right? But it can definitely tell you when the bid is moving up. I hope this helps. Come over to microefutures.com. We'll teach you how to trade using inventory structure and where the stops are. It's a great way to trade. It keeps things simple so you can focus on execution because trading's not, a difficult thing. The execution is. And if your mind is clear and free, then you can focus on execution because that's where you need all the practice. Once you learn how to see a market, the thing is how to execute. And you want to keep your mind free to execute. So you want to look at a few things as possible. Where's the supply? Where's the demand? Get in between the two, make a few bucks, go have a coffee. I'm JJ. Look forward to see you this week. Have a great long weekend. Come see me at microefutures.com. Bye for now.